Hi, I'm Russell Gard, Managing Director of Forward Prosperity Finance and Mortgage Brokerage. If you're a doctor, specialist, dentist, locum, or clinician, you already know that your income is high but often irregular. Medical professionals have to deal with unique working conditions such as locum shifts, private billings, overtime, and income that comes in lumps. Standard finance and bank loans are built for neat, fortnightly, PAYG salaries, not for medical or healthcare professionals. In this presentation, I want to show you how the right finance structure can maximize your cash flow, save you thousands of dollars in interest, and help you build wealth faster, while you keep focusing on your medical clients and providing critical healthcare services to the community. To start off, standard home loans don't suit regular medical clinicians. Why do standard vanilla home loans hurt high earners like yourself? As a medical professional, you have cash flow spikes, big locum payments one month, quieter periods the next. Banks and non-bank lenders typically push principal and interest repayments that can restrict your financial flexibility. With a standard home loan, you end up with less of a savings buffer for emergencies, less money to invest, and ultimately more stress. So, what's the good news? Well, the good news is that the home loan itself can be structured to match your life and your medical profession, not fight it. At Forward Prosperity, we are experts in helping individuals and businesses access world-class finance, and we are happy to help you understand the key loan features that medical professionals can use to make your home loan work even better for you. Interest only versus principal and interest. The first big consideration for medical professionals when choosing a home loan structure is whether to choose interest only versus principal and interest repayments. Interest-only repayments typically offer lower, more affordable repayments in the short term because you will only be paying the interest proportion of the loan without reducing the principal loan balance. Interest only is perfect for locum-heavy phases of your career or when you're building up your very own medical practice. And if the loan is for an investment property, the interest charges you incur can also be tax deductible. Later, when your income stabilizes, you can switch to principal and interest repayments to start building equity in your property and reduce the loan faster. Principal and interest means you will be paying down both the principal borrowed amount as well as the interest proportion that is being generated on the loan. At Forward Prosperity, we can model both scenarios to find the right timing or combination for you and your unique financial position. Next, loan splitting. This really is a medical professional's secret weapon. Using our finance and mortgage brokerage services, we divide your loan into two portions, part interest only and part principal and interest. For example, we could split your investment loan 60% into interest only, allowing you to maximize possible tax deductions and your cash flow. Then, the remaining 40% of your loan can be put under principal and interest repayments, giving you the ability to build equity steadily. With our expertise, we can help you get the best of both worlds with respect to your debt repayments, potential tax-effective lending, and equity growth. Plus, we could also organize a flexible redraw from the principal and interest portion of your home loan for things like emergencies or new investments that you would like to make. At Forward Prosperity, we can design a split loan to match your income, financial position, and goals perfectly. Offset accounts are your best friend. An offset account is essentially a savings account linked to a home loan where the balance of this offset account actually reduces the interest payable you will have to make on that loan. In this offset account, you can park any money or income you make, such as locum bonuses, tax refunds, or even profits from your medical practice. Putting money into your offset account will help you lower how much interest is being generated on your loans every single day, making it a powerful mechanism for you to save money on interest. At Forward Prosperity, we can also set you up with multiple offset accounts, letting you separate different income streams for a more clearer and defined structure of your finances. Consider this example. Having $50,000 in an offset account on a loan of $800,000 can save you anywhere from $3,000 to $5,000 in interest per year, depending on interest rate conditions, while also preserving full access to your money at any time. An offset account lets you lower the amount of interest generated on your debts while preserving complete access and autonomy of your money. Redraw and line of credit options. A redraw facility or a line of credit can give medical professionals even more flexibility. A redraw facility lets you access extra repayments you've made on the principal portion of the loan for things like emergencies or investments. Moreover, a line of credit facility acts like a revolving credit line linked to your home loan, meaning you can borrow up to an approved credit limit when you need it. With a line of credit, interest is only charged on what you actually draw, meaning this is perfect if you have lumpy income or times when your income might be relatively low or seasonal. At Forward Prosperity, we can explain all your options to help keep your costs low but your financial flexibility high. Family guarantee structures. Now, let's talk about family loan guarantee structures. A powerful way to help your adult children and family members buy a home sooner. A family guarantee structure allows medical professionals to use equity in their home as a security to support your adult child in purchasing a home of their own. A family guarantee can allow your child to borrow up to 100 to 105% of the total purchase price, covering the deposit and related purchase costs. This often means your child can reduce or completely avoid having to pay a very important fee known as lender's mortgage insurance, saving them potentially anywhere from $20,000 to $50,000 or more. A family guarantee is usually limited to 15 to 20% of the total purchase price and is released when the loan-to-value ratio drops below 80%, either through principal repayments or asset price growth of the property. At Forward Prosperity, we can find lenders willing to support your adult child access the property market and start building equity sooner. And finally, we have professional packages and layering. These can be real game changers for doctors and other medical specialists. You may not know this, but some lenders offer special packages for medical professionals, giving you the opportunity to borrow up to 90 to 95% of the property's value without incurring lender's mortgage insurance in many cases. And not only that, but some lenders can even provide waived fees in certain special circumstances. Then, using our expert finance and mortgage brokerage services, we can combine a professional package plus a family guarantee plus an interest-only split loan with an offset account, meaning you will get lower repayments, potential tax benefits, and faster equity growth for your family all at once. At Forward Prosperity, we layer these different financial elements carefully to give you the maximum benefit while providing a professional and streamlined service. At Forward Prosperity, we offer a completely free medical loan structure review exclusively for medical professionals. As part of this medical loan review, we will assess your income, expenses, and best possible structures given your unique goals and objectives. Visit www.forwardprosperity.com today to book in your free medical loan structure review. At Forward Prosperity, we don't just broker you finance, we give you a genuine structure that can maximize your cash flow and wealth while you provide critical medical services to the community. Thank you so much for your time, and I look forward helping you build the strong financial future that you and your family deserve.